Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today, just before we get started, I want to remind traders that the playlist, everything you need is in this playlist. Each day that I add a new video specific to the templates, the timings, the levels, the behavior of price, everything is added into this one folder. You should be able to find everything you need. You answer all your questions, repeating questions that keep coming up, levels, timings, templates, parabolic trade setups. So everything is in this playlist that you need as it's titled. And today we are going to be moving deeper and hopefully breaking things down simpler again in a 3-day parabolic trade setup opportunities. I'm going to review the main thrust and reinforce the simplicity of Monday, Tuesday, Wednesday, day 1, day 2, day 3. I'm looking for day 3 parabolic trade opportunities. The second half of the week, Wednesday, Thursday, Friday, day 1, day 2, day 3. That is my main criteria and my main templates. Now, each week when the week starts, Monday is a new timing cycle in a new week. Within that, as each day trades, there may be a 3 days of breakout opportunity on a day 1, on a Monday, as we saw last week. We've seen them this week. We may also see it on a day 2, a Tuesday. But my Monday, Tuesday, Wednesday template is still in place for the week. So I'm hunting out a day 3 opportunity on any day of the week based on 3 days of breakout traders in the markets on any given day, and 3-day setups that can be any combination of 3 days, which we reviewed in the previous video, talking about peak formations and identifying day 1, day 2s with breaks of daily levels. So understand we could have on a Monday, take out Friday's high of the week, and it could be 3 days of breakouts and form a peak formation in Asia, London, and give us a parabolic opportunity for a session trade in New York on a Monday. But that still starts our new week, Monday, Tuesday, Wednesday. We're going to answer some specific questions. I want to repeat this. Wednesday is the reset. I've got people asking me if is Tuesday a reset on this pair this week? Was Friday a reset on this pair this week? Wednesday is the reset. Monday, Tuesday, Wednesday, day 1, day 2, day 3, reset. Wednesday, Thursday, Friday, day 1, day 2, day 3. Wednesday is the reset. Wednesday is the reset. It is the midpoint range of the week. Friday is the closing range of the week. On a day 3, I am looking for a parabolic trade setup on any instrument. We can either have a trend trade that blows off in the direction of our 3 days. We can have one breakout of the opening range on a Tuesday. Wednesday breaks out. 2 days of breakout traders in the markets. And Thursday may continue in that direction. Traders are always constantly, I repeat this phrase, retail loves to counter trend. Not every single parabolic opportunity is going to be a counter trend trade. We can also have reversal trades. Now they will both set up entirely different. So I love when people say, well, yeah, that's great. We're going to get a trade today. Anybody can say it goes one way or the other. Well, what is the template and how does it set up on the day itself? Do you even have a best trade setup candidate, or are you looking at one instrument because you love trading that? So we're going to look at the different pairs, the majors, oil, gold, and the indexes. And the whole purpose of following different markets is because I am looking for a best trade candidate on the day, one where I have a 90-10 possibility. I'm not trying to trade little technical patterns and get a move. These are specific, well-engineered templates. And on the day itself, several traders will get smashed trying to counter trend a 3-day template. I repeat, they will get smashed trading a little technical pattern on the day because it's broken a high or broken a low, a daily level, but they're counter trending a 3-day template, or they're trying to trend trade with a 3-day template into the extreme, maybe even before major red news, or before, in the case of the indexes, before the New York equity markets even open. So on day 3, if you find an instrument that fits the criteria for a day 3, whether it's a Wednesday, a Friday, or a 3-day setup, could be a Friday, Monday, Tuesday, could be a Thursday, Friday, Monday, could be a Tuesday, Wednesday, Thursday. Or maybe you have 3 days of breakout traders in the market. Now remember, these are signal days, which we'll talk about in a moment. So a lot of traders get caught up on the signal day itself, and they miss the opportunity either the following day, or they miss the opportunity on the day because of this right here. What type of daily template is it? Is it a pump and dump? Is it a dump and pump? As we head into the session, and when I talk about timing cycles, in many cases we have major red news in the U.S. session. If you're trading London, you may have major red news. We had GBP news this week. We will often have every month. We get Swiss franc. We get major red news in the Asian session with Aussie dollar, New Zealand. Bank of Japan, obviously, when they're going to intervene, I typically will avoid that pair until after a major release. What levels do we have in play? High day, low day, closing price. We reviewed those in other previous videos within this playlist very specifically. Those are the 3 levels that I work from. And if a market has broken out of a range, and we have a thesis of a range expansion, we now still could have a lower low or a higher high in a market that is continuing in a range expansion, which means we redraw those levels. That's all that means. So going back to the playbook, again, the importance of understanding the opening range initial balance. Monday, Tuesday, study the, I need to hammer home when a new week starts, the whole new template starts again. People are, calling day 5 longs in the market. When Monday starts, we have a new template. It all starts again for me. Whether it's a breakout day, whether it's an inside day, whether we break out of the opening range on day 2, or we break out on day 3, we reverse on day 3. So understand when a new week starts. So reviewing 3-day setups, 3 session setups within that 3-day template. Day 3 longs, day 3 shorts. These are trigger days, signal days. First red day, first green day, the inside day. So first red day, first green day. A lot of traders are getting caught up and getting stuck on every up day is a first red day. A first green day. Or every down day is a first red day. And they may miss a perfect parabolic opportunity the following day because it's merely a down closing day. Or we get a first red day, but it actually trades as a reversal day on the day itself. So coming back to understanding what type of template do they engineer on the day. So I repeat, is it a pump and dump template? So on a first green day, and it's a pump and dump template, and we're trading into closing price as a ceiling, we may be still now in a day that's going to continue to move lower. No daily levels broken. Going back to our previous templates, 3 days of breakout traders, we can go one more day as we saw in gold. So they dragged traders a bit further before we saw the explosive short squeeze reversal tying in with a Monday, Tuesday, Wednesday template. Signal days. So on a day 2 of breakouts, we can get a third day in the timing window, a London Open, third day to the high of the week for a reversal parabolic opportunity. We'll look at an example of that. First green day, typically I would like to see a higher high that breaks a daily level. That's the setup for the dump and pump where other time frame traders are driving the move. Higher highs. I often show templates based on the hour in the playbook. They're hourly templates. As an example, we have the pump and dump on the British pound, page 19, a dump and pump template on the euro on page 20. These are hourly charts. First red day breaks a daily lower low in most cases for the pump and dump. And the exception to both of these is the sideways parabolic coil. And we'll look at that on gold today. We're going to break that down. And I repeat, when a market does not take out a daily high or a daily low and it coils sideways into the timing window, it is preparing for an explosive move. And the inside day is a signal day where we can have false break triggering a boundary for the reversal for a parabolic opportunity, as we'll look at on the pound Canadian that happened today. We can also see that as a signal day, high or low of a month. Day 1, day 2, inside day, day 3 to the high of the week high of the month, whatever, for a reversal beginning in a new timing cycle, perhaps towards the end of a month or beginning of a new month. But we can also see that in trend trades where we'll see markets break out, coil sideways, inside day, maybe a higher high the following day, pulling back, coiling in on day 3, a Wednesday, it could be a Friday closing range, Monday inside day, Tuesday triggers a daily high but pulls back inside day 3. Wednesday goes parabolic through the high of the week, and we'll look at an example of that. Remember, signal days. Signal days. You can have a thesis, you can have a bias, but what type of template is it on the day? Now, I want traders to really understand when a new week starts. You can have all the other stuff. You can look at closing range. You can look at day 5 breakouts, everything else. But let's just start with a simple, basic model. Monday is our day 1. We're looking for day 3 opportunities. We come to Wednesday and we have a high of the week, London Open, shorting opportunity, 1 push, 2 push, 3 pushes to the high, and the only time I'm counting pushes is when I'm outside. This market is in play on day 3. We've broken the daily boundaries. Now we're going to talk about a couple of other things with understanding breakouts. This is a 15-minute chart. We'll talk about the day 2 opportunity in a moment on Tuesday, but I just want traders to understand the difference between getting into a market and trying to catch a move and buy something because you think it's going up versus a parabolic opportunity that is going to rifle down and be done and over with. I'm coming to work for that session. That's it. That's my work window. I'm not trying to, buy something here and hold it for 5 days. I am looking at scalable opportunities where I can size in. This is the London Open. We have an engulfment at the high of the week on day 3 for the short trade into upper level longs. Now we'll look at this chart. Who's in the market? Now if we look at Tuesday, this candle inside the green box is the New York market open. The second hour, the 9:30 open, we take out the high of the first hour. We have breakout traders in the market. When we come to our high of the week reversal opportunity in the London session. So we have breakout traders in the market, and when we come to our New York window, this is a 1-hour chart, and you'll also notice that into the close of the session and into the new day, they buy the market up before we get to our London session on top of the New York hour candle. When we come to our London window on Wednesday, now let's just look at our Monday to Friday template, Monday, Tuesday, Wednesday, day 1, day 2, day 3. I said that Wednesdays are midpoint range of the week. So if we just take halfway roughly of this day timing wise and we mark off our high prior to that first half of the week, there's our day 3, which resets as our new day 1 heading into Wednesday, Thursday, Friday. There's our halfway point. We have a breakout, and now we also have day 1, day 2, day 3 breakouts heading into our London window. The market pushes up into the high of the week before making a higher low, and heading into our U.S. session prior to major red news, we make a lower low on the inside. Lower low on the inside. Second hour begins, and our New York Open, which we'll zoom in here in a moment, we have our New York Open candle closing right here. We'll just mark this off. This is the close of this candle is the New York Open, the engulfment. And so that level, if traders were waiting for another time frame, we have a lower low. As I explained, timing-wise, indexes 9:30. We can see first hour trades, second hour trades begin the move on currencies, oil, and gold prior to 9:30. Now, if we don't have a setup, or if we have a pump or a dump setup that needs to be still confirmed, 9:30 may be the window when that actually confirms. So now we have a high of the week level that's been broken out of. We have a break in structure. Heading into our New York Open window, we have our universal entry criteria met. This is a 15-minute chart. The pump began in the U.S. session on major red news. And if we come back and look at our New York timing window, this green box is the first hour of the New York equity market open, which was a breakout of our news catalyst hour. So look what happens. We break down inside, they pump it up. We have a break in structure, and the New York Open on Thursday opens at the top of our box of our New York Open hour breakout from Wednesday. Day 1, day 2, day 3, day 3 Wednesday resets. We get the pump and dump template for the vertical move down to where the pump began on the news candle. Day 1, day 2, day 3 resetting for day 1, day 2. 3 days of breakout traders in the markets that began the reversal in the London window. Parabolic collapse back to where the pump began on Wednesday. Point I want to emphasize is that we have a Monday, Wednesday, Friday template. Within that, we had a 3-day setup on day 3. Wednesday, in the London session, we had a day 3 trend continuation in the U.S. session on Wednesday. We'll talk about the day 2 Tuesday going parabolic in the direction of the trend. We have a 3 days of breakout traders in the markets in a new template for the reversal collapse on Thursday. So heading into the week, we had Friday. Our closing range of the week closes as a breakout day. Monday stays broken out. Monday, new week, new timing cycle. That is our opening range in a new week. Tuesday is day 3 in a potential 3-day setup that breaks out in the London window. So coming back to our universal entry criteria, who's driving this move? Other time frame traders. We have daily levels broken, 4-hour, 1 hour. They are all in. The market is continuing to make higher highs. We had major red news, first hour U.S. session. New York Open continues to go parabolic. As I talk about, on a day where the market is already broken out, I'm looking for potential range expansions as a possible profit target for a measured move. Day 1, day 2, day 3 blowing off in the direction of the trend. So again, traders constantly looking for the reversal trade and missing the trend trade. But when we head into our Wednesday now, we have a new template. Monday, Tuesday, Wednesday, day 1, day 2, day 3. Not 4 days of breakout traders in the market. It's a new template now. This is our opening range. Monday's our opening range. So the other option for measuring a potential profit target is a full expansion of the opening range on day 1, day 2, day 3. We didn't quite get there, but pretty close. But timings levels the behavior of price. Understanding Monday, Tuesday, Wednesday opportunities in the session that you're trading. Understanding 3-day templates for a parabolic opportunity. Understanding 3 days of breakout traders being in the market as a potential signal for an opportunity, whether that's a trend trade, as we saw on the front side, or a reversal trade, perhaps beginning the backside, which could close now, obviously, as a first red day. I just want to reinforce, we don't just keep dragging the day count, day 5 longs in the market. No, Monday's a reset. It's a new week, new timing cycle. Can you trade Tuesday as a day 3? Absolutely. Day 1, day 2, day 3, blowing off in the direction of a trend. We now have an opening range breakout in a new Monday, Tuesday, Wednesday template. That market gave a brilliant parabolic short trade in the London for a parabolic session trade. Now we have a break in structure on the smaller time frame, but no daily levels broken yet. We may have a first red day that may break a daily level, triggering, if indeed it is a first red day opportunity, lower low on the inside for a potential pump and dump trade opportunity that could take us back into opening range breakout traders. No idea. Don't care. They could work this down and make a higher high, bring it down for a dump and pump opportunity heading into our New York session. Point being is that how does the template set up on the day itself? We can have a signal day, but how does the daily template set up heading into our 3-session day 3 opportunity on a Free Cash Friday? Now, if we take a look at West Texas oil, we'll start at the Wednesday of last week. We had an inside day on Thursday, so again, a signal day. Breakout traders in the market at the end of the close on Friday, and we now have day 1 longs in the market, day 1, day 2, day 3, except that no parabolic opportunity presented on the day itself. And so now we have day 1 as a result of this high of day boundary being broken. Day 1, higher highs, and higher closing price into an inside day. So this is where traders need to understand that an inside day can be the beginning of a reversal. We had the dump and pump template into the London session. They dumped it down before reversing in London and pulling up to closing pricing, going parabolic into the second hour. Day 1 longs in the market. And if we just come back to our opening, our inside bar breakout, it's a 50% retracement of our Friday first day longs in the market. So Monday closes as day 2 longs in the market. And we go parabolic in the U.S. session for the reversal trade on Tuesday, giving us our first red day and also day 3 longs in the market. So an example of where signal day, day 2 longs in the market goes parabolic. An ideal possible reversing opportunity now on a vertical move, no major red news on the Tuesday for oil or relative to that, the market reversed and closed as a first red day. Now this is where I want to point out to traders, we had a break in structure, a little slight break of the low of the day for the pump and dump template into the closing price level and the high of day level that was the failed breakout from the day before. What type of template do they engineer on the day itself? First red day should make lower lows for the pump and dump template, lower lows, lower highs. We're now below the closing price on the day itself from Tuesday. The market pumps up again, giving traders the shorting opportunity in our New York session, and the collapse down at the end of the day to our low of day level, which takes us into our day 1 failed breakout high of the week for a 3-day template. Day 1, Wednesday becomes day 2. And Thursday, therefore, is a day 3 in a 3-day setup in a new weekly template. Monday, Tuesday, Wednesday. Pump and dump template. Lower lows. And we're below closing price. And the the low of day level prior to our New York session. Day 3 in a 3-day template can blow off in the direction of the trend. And as I pointed out to traders today, we had a possible range expansion. There are 2 opportunities. I suppose I just measured the rectangle. We can look at a full expansion of the high-low of Wednesday as our possible expansion targets. But this market gave a 300% expansion, and it began in the first hour. After major red news, we were on a 15-minute chart here, but we had the engulfment and the blow off that continued in the New York session. So just repeating that 9:30 is when the New York equity markets open if you're trading the indexes. But sometimes we'll see oil move second hour. That falls in line with the previous NYMEX trading times of 9 a.m. But currencies can move in that first hour, or with a news momentum catalyst. If we have an existing trade in place, I'll be looking for that continuation second hour. So understanding other time frame traders, if we just flip to our hourly chart, we'll just reset this template. Understanding that other time frame traders, if we're using the larger template, just go back to the low of the previous week, this template is being driven by other time frame traders, which is why I get questions from traders about, well, this little 3 push pattern on the 5-minute chart was a reversal sign. No, that's not a reversal sign down here on a market that's in a range expansion driven by other time frame traders. That's looking to counter trend a falling knife. So understand, how do you want to build your trading business? What type of setups are you building your trading business on? Little technical patterns and 1-minute swings and 5-minute 3 push patterns? Or are you building it on a larger thesis that when you're in a move, it's going to continue with very little stress, which is why I refer to day 3 opportunities as free cash setups, which, some traders, again, insist on trying to counter trend constantly, regardless of the template, because it's a first red day signal day, or a first green day signal day, or it's it broke out of the daily high, it was at the high of the week, or something like that, and they miss out on a range expansion opportunity by simply not understanding the template, the timings, the levels, and the behavior of price on the day itself. Which brings us to gold. And I want to point out a couple of things. We already talked about the dump and pump template from Thursday's high of day 1, day 2, day 3, another 3-day setup. So the dump on Friday coming from the high of day Thursday. So I'm going to point out a couple of things here that traders, indexes, oil, gold, definitely oil and gold in the indexes. But if we look at the New York hour, look how a market closes. We have on Thursday, hourly chart, 1 hour, 2 hour, 3 hours to the high. So the last breakout occurred at the New York open candle. And that candle, a trader asked the other day an excellent question: what's different between this first green day and the one that we had on the close of Monday? So we had breakout traders in the market. So the phrase "most breakouts fail," understanding who is in the market and when they are underwater. Lower lows, lower highs. This market continued to break down. So if you're in the market on this breakout at the open of the New York hour, before we even came to our U.S. session, we were already underneath of the open of the New York session. That market opened up right underneath. I'll just highlight that candle, the New York open, this little pin candle at the low of day level that followed through. And we talked about this being a range expansion of closing price to closing price, which forms our consolidation. We had breakout underneath, a breakout on top. That's our consolidation for a measured move, 200% down from the low of day level. So if we mark off the opening breakout of the New York session and we bring this across, there's our New York candle from Friday's breakout heading into our day 3. And I mentioned that breakout low of day level from Thursday was underneath of our consolidation on Tuesday, which was a day 3 in a 3-day cycle. So we had the parabolic reversal short squeeze on Monday, which closed above the high of the day. We've coiled sideways. So coming back and just understanding again who's in the market. We have breakout traders in the market on Monday on the reversal. The market stayed on top of the low of day level from Thursday before going parabolic on Tuesday. Major red news was the catalyst. We had a range expansion and the high of Thursday as the target. Again, DNC, do not counter trend the parabolic breakout. Which brings us to our London candle on Tuesday. There's our 1 hour candle New York Open after the news catalyst hour, first hour. We have breakout traders in the market. And notice how the breakout level from the New York session coincides with the closing price on Wednesday, closing price level. And I mentioned to a few traders yesterday after the New York hour printed, after our death candle, they were not going to let anybody out the rest of the session. They would coil it sideways. So we have volume trapped underneath of Tuesday's closing price level. We're inside of the hour of the New York session. So that whole hour, just the rest of the day went sideways. And we have volume trapped down low before they engulfed and reversed at the closing price level heading into Thursday, which gave us a nice little engulfment, 3-hour engulfment level. But we made higher highs. Higher highs. Now I want to emphasize something. We don't know what's going to happen when there's news on the calendar. So a lot of traders, we had first red day, and again, traders get stuff confused or just dead set on that whole thesis. And remember what we said, if this had broken down and we stayed under closing price, then we'd be looking for the pump and dump. But we're above closing price and we've made a higher high on the inside, and we've broken the high of the New York hour. So we had the death candle, then New York opens, pushes up into our death candle before collapsing, trapping volume. We've gone up and made a higher high. We have day one breakout traders in the market on Tuesday. Remember, no daily levels were broken on Monday, as I pointed out to one trader. Day one longs. Okay. Day two longs on Wednesday. Higher highs, higher lows. What type of template is this? Dump and pump, but we don't know what's going to happen until the news is released. So we've made higher highs, and before the New York session even opens, we had major red news, unemployment numbers released at 8:30. This is our 9:30 New York Open, but I want to point something out. When that 8:30 a.m. New York news is released, 8:30 to 9:30 is a full 60 minutes to let this template set up. Now, traders were looking to counter trend this, and I made it very clear in the post after this breakout occurred, do not counter trend this market. And it's a parabolic move on a day three that could reverse, but we don't have, if this was a false breakout, we would have broke a daily level. We have not touched any levels yet. We have a market that's, we're inside the high and the low of the day. When New York opens, we'll just draw our line across. We'll go back to our 15-minute chart. Remember where our New York session started on Wednesday. We're outside of that box. The death candle is now the target. Now, if this market breaks out, we'll look at this chart and just look at Tuesday's closing price projected into Wednesday. We had a lower closing price on Wednesday. I'll just get rid of this blue line. Where has the low of day been locked in? The closing price level. Let's get rid of that. Of Tuesday from Wednesday, dump and pump, higher highs. We've broken outside of that box from the London hour. The New York hour. This whole box is New York session. The levels. We made a higher high. We've broken out of that. The target is now going to be the high of the week at the open of the New York session. We coiled sideways without taking out a high of day level. So remember, if a market coils sideways, it's potentially about to go on a range expansion. Now, if we go high of day to closing price level, we have a full expansion of that range as a possible target. I posted the parabolic chart of what a parabolic trade setup looks like. First hour, they pulled back and continued higher. This V bottom is a peak formation low in a market that is about to go parabolic. It's come out of a parabolic channel. This is not a stop hunt. We haven't broken any levels. We are inside. They put a peak formation low and higher high, coiled downwards for the explosive breakout on the New York Open for a measured move, which several traders hit at the open of this market. Engulfment, a little pullback. This is a 5-minute chart. And we just in simple terms, we have other time frame traders driving this move. So important. I made it very clear. Do not counter trend a day 3 parabolic move. We saw oil go down for 300% expansion of the range. Just because something breaks out does not mean you need to counter trend it. So I want to reinforce the concept. How do you want to grow your trading business? Another trader asked me, but this 3-push pattern, that's a great short. Is that your trading model? Is that your edge? Or is that a technical pattern that you see that you just want to hit? I'm looking at a 3-day template that coils for an explosive move in line with other time frame traders. I can size into something like this because I know it has a high probability / possibility of completing a measured range expansion as a profit target. That is different than me trying to catch the high or sell the low or buy the low or whatever it is. I made it clear this may not come back, and so far it hasn't. It might tomorrow. It might collapse tomorrow, but that's the whole point. They will hold you up there. We have day 3 longs in the market. They may hold them up there until the U.S. session tomorrow and maybe dump it down, maybe not, maybe continue in the long direction. So understand what it is that you're doing. Understand how you are going to grow your trading business. Coming back to the templates. When a new week starts, I have a new template. Within that week, within those 3-day templates, I may have other opportunities in the sessions that I'm trading. 3-day setups, 3 days of breakout traders in the markets, 2 types of trades, trend trades, reversal trades, pump and dump templates on the day, dump and pump templates on the day. 9:30 New York Open for equity markets. May I get a first hour opportunity after news? Absolutely. But it has to align itself with the longer time frame opportunity. When we're targeting a day 3 on a larger 3-day template, I'm looking for parabolic range expansions on the ideal 5-star candidates. So not trying to counter trend, not trying to catch a move, not trying to scalp some pips. I'm looking for where I can scale into the parabolic opportunities. Step back. These opportunities, as many of you know, they continue and they morph into a new opportunity. If you understand, we're not just dragging the day count continuously. There's a template there, but there are other opportunities within that template for other best trade candidates, whether they're for session trades or 5-star parabolic range expansion opportunities. Keep getting better, traders. Congratulations. This has been a massive week. That's not going to end. We've been repeating this. Everything's rinse and repeat. Master your setups. Sit on your hands. Wait. Don't guess. Master yourself. Master your emotions. Scale it up in size. And may the markets go with you.